Hello, I'm Melinda Talbert, enroll agent with MJ Talbert Tax Audit Group, and I have a lot of good tax tea for you today. If you missed my live on Wednesday, you missed a lot of informative information for business owners about this new $80 billion the Internal Revenue Service is receiving in funding. So I have a lot of information to share with you today. I'm going to jump right into the content. Before I get into the bill, I want to share with you an update that was released today on the $80 billion in funding the IRS is receiving. The Treasury Secretary is giving the IRS 6 months for a game plan for the $80 billion in funding, and they have four priorities that I want to share with you today. The first priority is to clear the backlog. The Internal Revenue Service, as of August 5th, has 9.7 million unprocessed tax returns for the 2021 tax year. They are still behind. So we're hoping that by the end of 2022, all those terms are processed and we can start fresh in 2023 for the 2022 tax year. The second priority is improve customer service. Everybody knows when you call the IRS, it takes hours sometimes to get through, and hopefully this funding will help with their call volume. According to the Taxpayer Advocate, the IRS only answered 11% of their calls for the fiscal 2021 year. That's very low, 11%. The third priority is overhaul the agency's technology system. The IRS systems are so antique and old. They have over 60 different systems and none of them talk to each other. So, taxpayer advocate Aaron Collins wrote to Congress that the individual and business taxpayer account system is the oldest major technology system in the federal government. I'll talk about that in a little bit more detail when we get into the bill. The fourth priority is to hire workers. There's a lot of news and commotion in the media about the IRS getting ready to hire 87,000 agents to audit y'all and put y'all in jail. Partially true. They are getting ready to hire over 87,000 people, but that's not all in one year. It won't happen in 2022. It won't happen in 2023, 2024. 87,000 workers are supposed to be hired over a 10-year period. So, yes, they're getting ready to hire a lot of workers. Hopefully starting this year, I've looked out on their job board and they've already listed those jobs. So yes, they're getting ready to hire more workers because now they have the funding, but it won't be 87,000 workers to audit you all and put you in jail. So, but I'm going to touch on that as well in a little bit when we jump into the bill. I think that is all I wanted to share. Yep, that's it. Let's get into the bill because we only got a short period of time and I got a lot of information to share with you. So let me remove my beautiful face from the screen so you all can see the screen better. This is the actual bill. Before I get into the bill, I want to lay a foundation for you so you can fully understand the bill. And I'm going to share with you a report from the American Families Plan Tax Compliance. This is the agenda that was written up. This report describes the president's tax compliance initiatives that seek to close the tax gap. If you're not aware of what the tax gap is, the tax gap is simply the difference between the taxes that's owed to the government versus actually what was paid to the government. According to Treasury analysis, the tax gap totaled nearly $600 billion in 2019. And if that's left unaddressed, it's just going to rise to, it says, 7 trillion over the next decade. So, to raise revenue, improve efficiency, and build more equitable tax system, investments in tax compliance are of first order importance. Now, the president's compliance agenda has several transformational elements. The first one is provide the IRS the resources it needs to address sophisticated tax evasion, including nearly $80 billion in additional resources over the next decade is the plan. The IRS would grow manageably, but have certain funding in place to make investments with large fixed costs. And those costs is for modernizing the information technology, improving data and analytic approaches, hiring and training agents dedicated to complex enforcement activities. This would make up the ground that the IRS has lost over the last decade. The second thing is to provide the IRS with more complete information. Now, when the IRS can verify taxpayer filings with third-party information reports, such as W-2 forms submitted by employers to report their wages, compliance rates exceed 95%. So, the Government Accountability Office and the IRS agreed that strengthening third-party reporting is one of the most effective ways to improve tax compliance. This is going to get good, so please pay attention. The president's proposal leverages the information that financial institutions already know about the accounts that they house. Financial institutions, if you don't know what a financial institution is, that's like your bank. Financial institutions would add information about total account outflows and inflows to the existing reporting on bank accounts. The IRS will be able to deploy this new information to better target enforcement activities, increasing scrutiny of wealthy evaders, and decreasing the likelihood that fully compliant taxpayers will be subject to costly audits. As a result, voluntary compliance will rise through deterrence, and would-be tax evaders realize that the IRS has an additional lens into previously unreported income streams. In short and plain English, that paragraph means what it's saying to you is the IRS already not the IRS, your financial institution is already reporting any interest that you receive over $10 each year to the Internal Revenue Service. So what's happening is they're saying that you all are already reporting. Instead of just reporting the interest, we want you to report the taxpayers' accounts outflows and inflows. That means everything that's going in and out of your account, the IRS wants to know. They're also saying that, in short, if you are a tax evader, you need to be worried. If you're not, don't be worried. And they're saying that if this happens, which is going to happen, if this happens, it's saying that people that don't report all their income, now that they know it's going to be reported, they're going to start reporting all their income. So we'll see what's going to happen with that. The third thing is overhaul outdated technology to help the IRS identify tax evasion and serve customers. That's kind of like what I just touched on about the tax evasion people. The fourth thing is regulating paid tax preparers and increasing penalties for those who commit or abet evasion. Now, since the new Due Diligence Act for paid tax preparers are in place, they are asking for those penalties to tax preparers to be increased. I'll touch on the ghost preparers, and those are preparers that prepare tax returns and they don't sign it, they don't put any of their information on it. Unregulated preparers are about to be shut down, and I'll tell you how when we get into the bill. Experts at the Treasury Office of Tax Analysis estimates that these initiatives would raise 700 billion in additional tax revenue over the next decade. Now, the Internal Revenue Service, if you follow me, you already know that I educate people to understand the IRS is just a big collection agency. They're a business. Yes, they're a government entity, but they're also a business as well. And this business has received 80 billion in funding. They got to make a return on their investment. So they're saying, okay, we got $80 billion, but in return, we're going to raise 700 billion. So what do you think is about to happen? Find out soon. I'm going to skip over all this. It's some important information, but it's not what I'm going to cover today. Maybe I'll do a few lives over the next few weeks to try to update you all on just about everything that's happening with this new bill. This is what I wanted to touch on today for business owners and people that are that don't have businesses, because this will affect you as well. There is going to be increased information reporting with your financial institutions. The second step in the compliance agenda involves shining light on income streams, including proprietorship, a partnership, and a partnership business income. Proprietorship is Schedule C's. If you have a business and you file Schedule C's, this is for you, and this is for partnership business income. Also, S Corp and C Corps. I would pay attention to this as well. Bolstering information reporting is regarded by the IRS and the GAO as one of the best ways to increase the overall compliance rate. That's what I just discussed. So, right here, it tells you financial institutions house a lot of valuable information and indeed already provide third-party reports to the IRS. Those are the 1099 interest statements that you, if you have interest over $10, then those reports are sent to the Internal Revenue Service. So now they're saying leveraging this information rather than introducing new requirements for taxpayers is a proven way to improve compliance. The president's proposal requires information reporting on financial accounts to increase the visibility of gross receipts and expenses to the IRS. Today, business income is subject to limited information reporting. Current reporting of gross receipts exists for only certain types of revenue, and there is no information reporting on deductible expenses. This is why the tax gap for partnership, S corporation, and proprietorship income is estimated at around 200 billion annually, with the net misreporting percentage for certain income categories exceeding 50%. Third-party information reporting is already provided on primary income streams for the vast majority of Americans, such as wage, which is your W-2, the pension, and the unemployment income, which is the 1099s that you receive. The president's proposal would help make tax administration more equitable by subjecting financial flows, especially those that accrue disproportionately to those at the top of the income distribution, to third-party reporting as well. The new reporting would build from the framework of the Form 1099 report that taxpayers already receive from financial institutions when they earn more than $10 in interest from a bank, brokerage, or other financial institution. Financial institutions would simply report additional data on the financial accounts of these existing information returns. Specifically, the annual return would report gross inflows and outflows on all business and personal accounts from financial institutions. That's including the bank, loan and investment accounts, but carve out exceptions for accounts below a low de minimis gross flow threshold. Other accounts that are similarly situated to financial institution accounts will also be covered under this new reporting. For example, payment settlement entities would also be required to report gross receipts and gross purchases. A payment settlement entity is your Venmo, your PayPal, your Cash App. That's what payment settlement entities are. It says that this reporting will also cover foreign financial institutions and crypto asset exchanges and custodians. That's good, y'all. Okay. This new reporting requirement would come with no additional reconciliation requirements for taxpayers. For already compliant taxpayers, the only effect is to provide easy access to summary information on financial accounts and to decrease the likelihood of costly no-fault examinations once the IRS is able to better target its enforcement efforts. For non-compliant taxpayers, you are encouraged to voluntarily compliance as evaders realize that the risk of evasion being detected has risen noticeably. The revenue estimates assume that the bank reporting proposal will become effective for tax year 2023, building an implementation time for the IRS and for financial institutions. This additional information reporting would also enhance the effectiveness of enforcement measures, as it will provide a proxy measure for a taxpayer's potential income position, and suspect account flows could help the IRS better target its enforcement activities. This would benefit compliant taxpayers whose risk of costly no-fault audits would decrease as the IRS better target enforcement actions. According to the Office of Tax Analysis, this increase in compliance that would result from this non-reporting regimen is estimated to raise $460 billion over the next decade. Okay. I'm going to sum all this up in a very short sentence, maybe 2 sentences. Let me make sure I went over everything first. Yeah, that was it. So what this is telling you is your bank, your financial institution is going to start reporting your inflows and outflows in all of your bank accounts. If you have unreported income in your account started in 2023, it's going to raise a red flag for an audit. The IRS is going to want to know where this money came from that you did not add on your tax return. Where did it come from, and why wasn't it imported? This is going to raise a lot of audits. And I know in this report, it states that if you report all your income, or if you're a compliant taxpayer, in short, it says you have nothing to worry about. I totally disagree with that, because they're not going to be able to distinguish if the income in your bank is from, if it's a gift, if it's a winning, if it's a, they're not gonna know. Like, I'm confused as to how they're going to determine what should be reported and what shouldn't be reported. So I'm interested to see what's going to happen with this. Okay, let's jump into the bill. This is what President Biden has signed into law. So everything that I'm about to go over is approved, it's law, and it's happening. This is the actual bill. It's over 730 pages. I'm going to only focus on the tax portion. That's my expertise. That's my lane. And I'm going to stay in my lane. So part 3 of the bill is funding the Internal Revenue Service and improving taxpayer compliance. Part 1, taxpayer services. For necessary expense of the Internal Revenue Service to provide taxpayer services, including pre-filing assistance and education, filing and account services, taxpayer advocacy services, and services as authorized by 5 USC 3109. They're going to receive $3,181,500,000, and that will remain available until September 30th, 2031. Number 2, they're going to receive funding for enforcement. This is my lane. This is my expertise. I help you fight the Internal Revenue Service when you are accused of owing a past due amount. The funding for enforcement is for necessary expenses for tax enforcement activities of the Internal Revenue Service to determine collect owed taxes, to provide legal and litigation support, to conduct criminal investigations, including investigative technology, to provide digital asset monitoring and compliance activities, to enforce criminal statutes related to violations of internal revenue laws and other financial crimes, to purchase and hire passenger motor vehicles, and to provide other services as authorized by 5 USC 3109. They're going to receive $45,637,400,000 that will remain available until September 30th, 2031. They're going to receive all this money, a little over $45 billion, just for enforcement. And if you take a look right here, it says to provide digital asset monitoring and compliance activities. Hint, hint, compliance with the third-party reporting. Moving right along. Number 3, they're going to receive funding for operations support. That's going to be for necessary expenses of the Internal Revenue Service to support taxpayer services and enforcement programs, again, including rent payments, facilities, services, printing, postage, physical security, headquarters, and other IRS-wide administration activities. Research and statistics of income, telecommunications, information technology development. I'm going to go over that in a minute. Taxpayers should be worried about that. Enhancement, operations, maintenance and security, and the hire passenger motor vehicles. They're going to receive $25,327,400,000 for, what was that, operations support. And it's going to remain available until September 30th, 2031. Business systems modernization. They're going to receive $4,750,700,000 for business system modernization. It's for necessary expenses of the Internal Revenue Service's Business Systems Modernization Program, and that's going to include development of a callback technology and other technology to provide a more personalized customer service, but not including the operation and maintenance of their old systems. Task force to design an IRS run free direct e-file tax return system. Now, this is what tax preparers, anybody that prepares tax return for a fee, you are a tax preparer. You should be worried. The Internal Revenue Service is receiving $15 million right here, $15 million for a free direct e-file system. So the IRS is building their own e-file system for taxpayers to be able to file their taxes for free. In the bill, it says this is going to be for necessary expenses of the Internal Revenue Service to deliver to Congress, and they have 9 months following the date of enactment uh, to report, number one, the cost, including the operations for differential coverage based on taxpayer adjusted gross income and return complexity of developing and running a free direct e-file tax return system, including costs to build and administer each release with the focus on multilingual and mobile friendly features and safeguards for taxpayer data. Two, taxpayer opinions, expectations, and level of trust based on surveys for such a free direct e-file system. And number three, the opinions of an independent third party on overall feasibility, approach, schedule, cost, organizational design, and Internal Revenue Service capacity, such a direct e-file tax return system. And the $15 million will be available until 2023, September 30th. So the IRS has until September 30th, 2023 to invest this $15 million into building a new free e-file system for taxpayers. Pay attention, tax preparers. Let's see, we got a few more minutes. Let me see how much more I have. For now, I am going to pause there, and I'll do another live next week to go over the rest of the important information that's in the bill. I just really wanted to make tax preparers. Let me see. Let me add myself back in. I really wanted to make tax preparers and taxpayers, especially business owners, aware of what's happening with this bill, what the IRS's plans are for the $80 billion in funding that they are receiving. If you have any questions, I can be reached at MJ Talbert Tax Audit Group, 706-507-2481. Or you can schedule an appointment or free consultation, no obligation to sign up for any of our services. I do a lot of free work for taxpayers that are in need of assistance. You can schedule that tax debt strategy call at www.mjtax.com, and I'll be happy to help you all. I will talk to you soon. That's my time for today. Have a good one. Bye.